G'day guys, welcome back to the channel. Hope you're all doing well. Another week gone by quickly here. What a week. Lots happening in world markets, currency markets. US dollar booming, Great British pound dumping, problems with the yen. Oh, it's pretty crazy, to be honest with you. But it's impossible to cover all of this stuff. So I wanted to caveat that now quickly. The volume is just getting beyond belief. I'm trying to be quite selective, but I'm finding it very difficult. So I may pull this back to monthly, but then just maintain Bitcoin stuff. Bitcoin's a little bit boring at the minute, I know, but I think there's some interesting stuff that's worth keeping an eye on in that world. I just think it's maybe a little bit overwhelming for everyone and me to just keep focusing on like US and world markets and then Aussie and then Bitcoin. There's just so much happening. It's unbelievable. But as always, let's get stuck into it. We will start with a little bit of craziness. I've been going on about this for a while now. It's up to you to protect your kids from the lies that are being pushed onto them. Propaganda is very, very powerful. And I think we've seen that now over the last couple of years. People will believe anything they're told by advertising or particularly some sort of, body of people. And most people are sheep, so they just go along with what they see or what they're told. And it's up to you to show the evidence and the truth of the matter, particularly to your kids. Frighteningly important. So you can see here, Sesame Street. This is pretty full on. They are advertising out and about on the streets with a climate catastrophe hashtag here. So they're saying there's a countdown to mass extinction. C is for catastrophe. The ABCs of apocalypse, and learn about dystopias. I mean, if you're letting your kids watch this, you've got shit for brains. If you're telling them that there's a climate catastrophe, you have shit for brains. If you're not letting them, just embrace their youth and pushing all of this to the side and reassuring them that there's no problem with their future, then you have shit for brains. So just be very conscious about what's getting pushed into their heads from the schools. Sure, everyone's got on things on. I'm sure everyone's on top of things at home. I get it. But at school and what they're watching, it's almost impossible to keep fully a track of things. But my God, this is a trusted brand, Sesame Street. We've all watched Sesame Street. So, you don't want, this is going to come up. This is the same nudging that goes on with grooming for transgenderism and for, all of the gay stuff that goes on. It's just not necessary for kids, quite frankly. So just be careful. This is a great clip. I could not share this. This is called coercion, and this is what you experienced since the the pandemic, where which is starting to unravel now. Wow, it's unraveling at a pace that is hard to believe. But just look at the energies and efforts and funding and money and fake printing and overreach and aggression and threats of violence and everything the government did to you to get you to have those precious jabs. Shout out to our favorite MD, Anthony Fauci.
Now states and companies are going all out, providing incentives to those who have not been vaccinated.
States are ramping up those incentives, everything from cash prizes to college scholarships.
New York State raffling off 50 scholarships to 12 to 17-year-olds who get vaccinated.
You're worried about paying college tuition? Tell your 12 to 17-year-old, get a shot.
Thousands of prizes available,
including cruises and Super Bowl tickets.
They're giving away Ford F-150 trucks. They're giving away shotguns and hunting rifles as well.
Marijuana dispensaries are giving away
joints for jabs. Krispy Kreme announcing this week a free donut. And yes, free beers.
That's right. Get a shot and have a beer.
Today could be your lucky day if you've gotten at least one COVID vaccination shot.
California's vaccine lottery.
That's right. You could win $1 million.
$1 million.
One grand winner to take home
Up to $5 million if you get vaccinated next week.
$5 million. You guys weren't expecting that one, were you?
They made it exciting, right? There's a reason people go to Vegas.
It really could be somewhat lucrative for them to get vaccinated if they aren't already persuaded.
Just think of this when you think of vaccination. Vaccination.
If you need luck with love, dating apps are offering incentives too.
We have finally found the one thing that makes us all more attractive, a vaccination.
It was unbelievable, honestly. This shit will go down in history book. There's no doubt about it. You were had. It's mind bending. There's no other words for it but mass formation psychosis. There's a really good book that I'm into at the minute by Matthias Desmet. He's a professor out of, I think, Denmark, and he's written extensively about totalitarianism and these mass formation psychosis episodes that have happened in history. It is unbelievable. And look, if you get a chance, have a read or actually listen to some of his interviews. He's on lots of pods, or he's on a few pods. And you'll find him on YouTube. He's very interesting. Into the markets, and look at this, where you have the US dollar milkshake theory has come to fruition, or is coming to fruition. Santiago Fund on Twitter has been calling this for years. It is happening in front of our eyes. The exorbitant privilege is destroying the currencies. Australia is getting wrecked. New Zealand, the Great British Pound, the yen, the Korean won, everything. Every currency around the world is getting wrecked against the US dollar. This is what happens when you're the reserve currency. So just to give you a little bit of clarity on this, and I don't think many people actually really understand the system or how it works, but Jim Bianco's put a nice chart here together. The US economy is about 25% of world GDP, but thanks to the dollar reserve currency status, the exorbitant privilege, about 85% of world trade is priced in dollars. The dollar's surge is putting enormous stress on global trade as the benchmark devalues their local currency. So all the other currencies have to devalue and buy more US dollars. So if you're a sovereign like Australia, say, you just print and devalue your currency so you can buy and actually do trade in US dollars, because everyone has to do trade in US dollars. You just don't get it. You don't understand how it all works. So, imagine having a unit of account or a medium of exchange that couldn't be printed by a sovereign, that wouldn't be manipulated, that wouldn't favor one body over another, that you could trade at the speed of light. I mean, you know what that is, don't you? It's Bitcoin. It really is. It really does make sense. If you look into it properly, you will see that it becomes incredibly obvious that it's, going to end up as a trading medium for countries. There's no doubt. How could it not? You can't have countries like America or wherever printing money out of thin air with nothing, just with the click of a button, to buy hard resources from other countries. No one's going to keep putting up with this when there's such supply issues around the world. It's just not going to work. This is how inflation. This is why we've got inflation partly. So it's not good. The bond market is having a disaster this year. It's just sort of mind-bending how bad the structural formation of the markets are. They are much more precarious than people tend to believe. Now, I get it. Most people just live in their own little bubble and worried about their mortgage and, you know, their work and whatever. That's fine. But there comes a time when these things all impact us. And that time is coming up pretty quickly, I think. It's mind-blowing to watch the bond market. It's the worst year in history, recorded history, in the bond market. You know, they've plunged another 1.2 trillion this week alone. And I know that doesn't sound like much, but you need to think about, write down on a piece of paper how much 1 trillion is. It is so much money. It's insane. So look, something to keep an eye on. I don't know where this all ends. We've broken out of all sorts of things. At the minute, it's safe to say that I think the bond market isn't functioning correctly. It's either illiquid, or the pressure on the currencies, the Forex, the other currencies, apart from the US dollar, and the countries are under so much strain that basically it's turned the bond market illiquid, the treasuries. So I don't know where this ends. It's not that pretty. And I sort of have a sneaky suspicion, and I hate to say this, I think it's going to get bad pretty soon. And they may have to print with inflation hot. And you know what that's going to cause? More inflation. But who knows? This is the fastest slowdown that they've ever done, the fastest hiking rate cycle they've ever done around the world. So, you know, people are way behind in their thinking. They've got a recency bias of everything's easy. That is out the door. If you have that attitude, you need to realign your mind, because it ain't going to remain that way. Here's Jim Bianco's work here on the global aggregate bond market. Look at this thing. It is a sight to behold. It is so far out of the norm that this should send shivers down your spine, quite frankly. This is not one standard deviation out. This is like 3 standard deviations out. So, you know, I don't know. I mean, how much further down can we go? September is traditionally horrific for everything, but, you know, like we've got a quarter left. I guess let's just see what happens for the rest of the year. Maybe we get a bid, maybe we don't. Maybe we keep, you know, rolling down and then we roll further in 2023 or halfway through 2023. I don't know. But I think they're going to maintain their course until inflation is back down to 2% CPI. So you can see here, this is a prime example. This is the 2-year US government bond. It's literally going parabolic. This is unsustainable. So this is a great predictor of where the Fed funds will end up. This is already at 4.2%. And the 10-year is a good one as well. So everything's rushing higher, saying what the bond market is telling the Fed and telling everyone is that rates need to go up. We need to raise rates. That's exactly what it's telling us. And yet we continue to do these pathetic 0.25 in Australia anyway, these little raises. We need to smash it up. It needs to go up 100 basis points or 75 or whatever, but we need to push up. It's just not fast enough. And so this is a really interesting data point. These are a lot of the participants' viewpoints who are on the board. These are the FOMC participants' assessments. You can see here that by the end of 2023, like over a third of the people are saying, or well over half, so let's just say with 66% of the people saying that the rates are going to be over 4.5%. Some of them are saying it's just under 5%. Now, if that's Fed funds, or let's say Australia is near there, so let's say Australia is a 4.5% by the end of the year, your mortgage is going to be at 6.5%. If you're not fixed for however many years, but that day will end for Australians. That is enormous. As I've said before, you got to start doing your numbers. Do your numbers on your mortgages. Run scenarios on what you might be paying, because these numbers are real and they're bloody high. Well, they're not actually high. They're high comparatively to where we've been, which is 0. So a lot of people around the internet or in macro world call this the chart of truth. You can see here that there is a problem with the chart of truth. See, historically, you've been able to basically be a bond bull and use leverage and just kill it constantly because this sort of trend of lowering interest rates has been your friend for, however many years. This chart, I think, is good on this trend line for, say, 35 or 40 years. But when you break out like this, a lot of people thought it was going to bounce off the red line and come back down. And then that would have been the end of our issues out in macro land. We would have started to grind back up. No. We're nowhere near. We are nowhere near there yet. And wouldn't be surprised. You got to keep an eye on the bonds. Let's say, who knows? They could end up at 6%. I just don't know. But they need to get on top of things ASAP. And Jerome is crushing the market every step of the way. So we'll just see how it all. Cross-border capital again. I'm loving this guy. He's succinct and he's a smart operator. So junk debt, ironically, since sort of 18 has been a pretty good analog of the S&P. This is the S&P here, the red line. It looks like the S&P's got a long way to go down. So, based on this junk bond index, the S&P could be headed somewhere between 2,700 and 3,300. So, how are you ready for that's 15% down? We've been saying that for a while. 3,200 is a pretty decent target, I think, for the S&P. It's another 15% down from where we are now. I think that's probably realistic, to be honest with you, based on what's going on. Countries are going to start to default, I reckon, on their debt fairly soon. Very, very troubling times all around. The UK is having a disaster. They have just elected their new bird. Say that people find that sexist. It's not sexist. But people have elected their new prime minister and it happens to be a female. She, I won't get into too much of that, but she is definitely cut taxes instantaneously and provided a lot of stimulus relief for people. That it's very socialist in nature. She's, I'm sure that she's probably just doing what anyone would do in her position. But it's not helping the country. In fact, it's doing the opposite. It's cratering the country. And those tax cuts that she just provided everyone have already been negated by their collapse in their currency. And if you look here, this is their yield, all their yield curves stacked up on one chart, thanks to Preston Pish. They're in strife here. This is not good for the Brits. This is worrying times for the pound. I would say we're very close to parity now with the US dollar. I'd say we'll go beneath that, which I can't believe we're even saying, because the British pound has been, the pound has been a very strong currency for a very long time, and it is just falling away in front of our face. And just to show you that exact number, we're almost at $1. It's a 103 currently. Now this chart, this is the worldwide forex exchange market. It is an enormous market. It is enormous, the volume that gets traded every day. It is trading like a shit coin. Look at it. This is unprecedented. The percentage changes are just insane. And what you do when someone says to you, I mean, this is great. When someone says that Bitcoin is volatile, don't get me wrong, but when someone basically says, Bitcoin's too volatile to be a currency, look at this shit. This is like the third or fourth biggest currency in the world. It's just so yeah. It doesn't fit the narrative of de jure for Bitcoin, but I mean, everything that's happening is great for Bitcoin, honestly. And I know it's hard to believe because the price is sort of just plodding along, but the use case for it is just growing parabolic every day. It's actually hard to believe. So CDSs, we'll get into them in a sec, but Credit Suisse, this is a big outfit. I'm sure you've heard of them. I'm sure you have. I think they're worth something like 30 billion. Their stock is in a disaster. Now, this is a bit of a contagion moment happening. We've been talking about Credit Suisse now for a little while. Their CDS is something that we've been keeping our eye on. If you go back through previous episodes, you'll see that. And CDS is credit default swap. So you can see here that basically Credit Suisse must be insolvent, I would say. And I would assume they have a bunch of poor loan book. They've got a really weak loan book that's becoming insolvent as the businesses are becoming insolvent in the whole of Europe. And if you've got big companies in Europe which now can't produce anything because electricity prices are too high, of course, these guys are going to keep going down. Now, all of the banks are interconnected, whether you want to believe that or not. So, we don't want to see banks start to go down because eventually it's going to weave its way back into our sector. But keep an eye on these things. No buying of falling knives at the minute. Don't try to find the bottom in the stonks because no one knows where the bottom of the stonks is. And you can see here the Credit Suisse spreads are nearly up at the global financial crisis numbers. Crazy time. Even China, China's had a disaster this week. We've got no transparency with China. So we've got masses of reports that Xi Jinping, the leader of the Chinese Communist Party, was put on house arrest in a coup from a general in the military. And they're overthrowing him, blah, blah, blah. Now, China's in a whole world of strife, and I just don't, it's impossible to know what to believe here. They've already done it. They did us in with the people falling over on the street video when COVID started. That was the most fake shit ever that we believed. We all did. And so who knows what to believe here, but we've got to keep an eye on it. Anyway, the market is obviously saying that they're at risk of a sovereign default. Hence the credit default swap just progressively going up over time. But we're having I know this chart is very zoomed out, but we're having pretty aggressive jump here. So, man, I don't know. The China thing is so impactful in the world because they are the only generator of growth. So, it's not good for iron ore. Let me give you the hot tip if you're in Australia. But let's just see. So over to Australia. It's a funny time. We, in the great good graces of Phil Lowe, he's just rolled in a big loss here, 50 billion. Australia's RBA bought over 300 billion in government bonds on the open market during the COVID madness and now will book a $50 billion plus loss from this, putting it into negative equity and unable to pay the federal government taxpayer any dividends for years. Well done, Phil. So, it's not a good situation and he should be fired. He actually should be fired. He has managed things so poorly You know, I don't think you really want the job, to be honest with you. But either way, you know, he's lied to the people. He's told them to get mortgages. Then he's pumped the interest rates up, and he hasn't done them enough, and he's been too slow off the mark, and he's pushed heaps of liquidity in like super low interest rates. Kept cutting interest rates. Should have had interest rates going up 10 years ago. But the cocaine, as I call it, it's addictive. The cash. They want to bring forward their consumption. That's what a mortgage is, or a loan, or credit. It is bringing forward your future consumption. And if you think of it that way, you know, you want to be pretty careful with your bringing forward a future consumption, because the future's unknown. You don't know what's going to happen. Hence the situation Phil Lowe got a $50 billion loss sorted out with. It's good. Well done, Phil. So the Aussie rates are predicting now May 2023 or June 2023 will be at just under 4.2%. So that means for you at the bank, you're looking probably at 6.5%, 7%, maybe interest only, might even be 7.5%, 8%. Maybe by then, nah. Maybe 7.5%. That's probably fair. You need to really run your numbers now. You're not going to get a mortgage anymore. And thus the property prices will come down. They must, because people just can't afford to speculate like they have. Now, the government here and in a lot of countries, quite frankly, they will do whatever they can to keep the property market propped up. You know, most of the government would have multiple properties. It's in their best interest to prop the shit up out of the property market. For those who, you know, have done the right thing and been prepared for a crash, you know, it may not come. Just be aware. I think a slow grind down is probably realistic. So we'll just see what happens. Obviously, we've got to keep an eye on this. I'll do my best to keep an eye on this for you. But yeah, look, as I've said, if you're out looking for houses, you are lowballing the hell out of your bids. You're not getting into bidding wars at auctions. That's stupid. You are lowballing with cash offers prior to even this thing going to auction. Early offers. And if you don't get them, just be patient. Your time will come. Now, the problem with inflation and our highly employed, apparently, populace here in Australia is that we are living like we are earning in 2008. So real wages, you can see here, where it's not good. You're earning like you're in 2008, but you're paying like it's 2023 prices. So you're getting killed by inflation. You're getting killed by inflation. And it's bloody scary to think about, to be honest with you. You know, just be prepared for crazy stuff to continue to happen, because when things start to get out of whack like they are now, big changes can happen in this clown world that we're in now very, very quickly. And, you know, you can wake up one morning and a lot's changed. Very interesting chart here. Basically, borrowing capacity has capitulated for the average Australian. It's pretty crazy. This chart, I don't really need to describe it. You can see exactly what's happening here. So as we increase the rate, the real rate that the RBA passes, basically you basically just go down in the amount that you can borrow, and we're aggressively upping those numbers. And so, you know, if you're in your mortgage, great, but if you're looking to get another mortgage or you're trying to invest in something, it's going to be pretty tricky. Here's a really good little summation, I think. So the $2.7 million house back here, it's really knocked you around, to be honest with you. So you can see here the annual mortgage rate, 2%, which is what it was, and now this is just looking at 5%. Very generous. It's going to go higher than 5, but let's have a look here at 5. Life in the loan is 30 years. Number of payment years, 12. Payments per year, is 12. So it's 360 payments. Just remember you're paying about double when you get a mortgage. Not quite, but nearly, roughly. So that's good. So there you go. 30 years of just giving money to the bank. Well done. Payment periods, you can see there. So then you add in the assumption of a 20% deposit, which is very unlikely. No one I know, probably a few, not many people I know have $676,000 sitting in their bank account ready for a deposit on a house. This is not including stamp duty, not including all sorts of stuff. It's a huge number. You can see what it does to the potential purchasing power here, the house price at the bottom. So you could previously get on, before May, a 3.38 with this type of arrangement here on the left-hand column. Now you can only get 2.5 million. It's unbelievable, the difference. And so that's a 26% change so far. So I think that's probably a pretty accurate depiction of where the property market's going to go. I'd say 25%. I think I've said 25% for a little while now is probably about right. If we stay only at 5. If inflation is very sticky and, there's some more conflict or a country defaults or some big banks go under around the world or whatever happens, shit's going to happen because stuff is looking bad. It could go a lot further than that. Again, this is not every house in every suburb, but get a bit of a broad stroke spectrum here. Somewhere between 20 and 30, 35, maybe percent. If we go to 8% Fed funds or like RBA rate, I don't know, maybe we're down 50% in houses. Who knows? But 2023 is going to be very unknown. So just prepare yourself for some bumps in the road in 2023. That's all I'm saying. All right, Bitcoin. And I'll go to the chart at the end, I think, today. It's just an interesting chart to look at. I think at the minute, I'm going to do an Aussie dollars because we're getting fucking killed on the Forex exchange market. I can't stand this happening. What's happened is you do all the right things for a long time and you stack cash, which is Aussie dollars, foolishly. Then the Aussie dollar gets absolutely murdered and you lose purchasing power. And it's just very frustrating. And that's what people in Australia sort of forget, I think. You're losing so much purchasing power on your Aussie dollar. It's just so weak and pathetic. It's just very frustrating. So a very interesting little chart just to compare here. I know it seems like Bitcoin is having the worst time of all, but it's not. Basically, things changed in COVID, which we know. Everything changed. The new money printing started. Modern monetary theory was tried. It failed miserably. Everything's changed since that date from the bottom. And you can see here where we're at comparatively to the other asset classes. Still up a lot. We're still up a whole lot. And, if we can hold this spot, it will be a Herculean effort, I have to say. And a lot of signs are saying that we're very close or near the bottom, touch wood. Bitcoin could catch the biggest bid ever out of all this. If countries start to default and, there's more reckless behavior from some of the, the euro, obviously, that's in strife. They're going to have infighting between the countries fairly soon. The yen, who knows what's going to happen there? The Chinese yuan, who knows what's going to what's it going to, there's a lot of unknown. The only thing that we know is Bitcoin. We know what's going to happen with Bitcoin. The monetary policy is set. We know it happens like clockwork. There is no intervention possible. There is no CEO to manipulate it. There is no government to overreach you. There is no nothing. It just does what it does. It is just Bitcoin. Block after block after block. It doesn't care about the weather. It doesn't care about the climate. It doesn't care about what color you are. It doesn't care about if you're a male or a female. It doesn't matter if you're a transgender fucker. It doesn't care. It just does its thing. It's the most apolitical thing on the planet because there is no leader. It's uncorruptible. And you should all hold some, quite frankly. That's not financial advice, but it really is. It just really is. So, yeah, it's. I know what I've been doing, and I've been stacking under 20 US. I just think it's just a good number. May see lower. The internet is screaming for 14, somewhere between 10,000 and 14,000 US dollars. Maybe because there's so many people screaming that we won't get there, and the biggest pain would be. So, I don't know. I just don't want to miss the boat. And if I have a decent time horizon, I know that if I buy now at 20K, it doesn't really matter if I've got a 5 or 10 year time horizon on these before I want to pull them back out, or if I want to ever sell them, or I mean, who knows? It doesn't matter if I get them for, 16 grand or 20 grand. It doesn't really matter. So, interesting to see. Good to remember that it's still a very high performer. Now, the rational root is really done some good work here. And there's a podcast, if you want to listen to it in more depth. Actually, you should watch it on YouTube because a lot of the charts come up with Peter McCormack on what Bitcoin did. The rational roots produced a lot of good stuff here. Basically, this short-term holder and long-term holder cost basis ratio has been, ironically, the crossover points have literally called the bottom of the market, ironically, the last few cycles. So it's an interesting little piece of data. And you can see that the dots at the bottom are basically the intersect point, and we've just intersected. And so these have called the bottom within a few days, both times. So you could say that maybe we're at the bottom now, or maybe we're coming up to a bottom, maybe just duck under 17 in the next week or so, or a couple of weeks. And by the end of September, I think probably November we might see a little bit of low action. But either way, we're getting very, very close. Here is that same chart zoomed in, just so you can see it a little bit more clearly. We have crossed officially, you can see there. It's just going to be really interesting to see. The pink line is obviously the Bitcoin price. And yeah, it's going to be interesting to see what happens here. Whether we are actually at the low. Either way, since June 18, we've had a phenomenal accumulation phase. There's no denying that. We're going to have at least 3 or 6 months in the end to have stacked, and it's only going to be our own fault if we haven't stacked enough and we miss the start of the next leg. Obviously, you've got to take macro into account these days, I think, but, look, people are going to jump at this when they can. The ability to hold your own money in a sovereign manner is going to become so important. I cannot stress that enough. It's going to be everything soon, because everything else is going to be manipulated. And the more that CBDCs come in, the more Bitcoin becomes appealing. This is the final chart from Rational Root that I've got today. Thanks, mate, if you're looking here. The guy, you should follow him definitely, and thank you for the charts. They're really good. Here are comparisons of the last cycles. You can see the 2014 comparison and the low, the 2018 low, which it just missed by a couple of days, as it did with the 2014 low. Now, that's what makes me think we've got just a tiny bit lower to go. Maybe not. But you can see it's all pretty looking in good alignment. But look, let's just keep that in mind when you think that 10 is coming from some moron on the internet. I just can't see 10 unless we have a worldwide black swan. I mean, yeah, maybe we will. We've had one recently, so maybe we will, right? This last Bitcoin data point that I wanted to bring up, you may have watched some of my of these weekly wraps right at the start when I was doing them, and I was onto the CBBI and we were talking about potential peaks. It's a great indicator, although it didn't give us the peak this time around. It's a great indicator of some of these other metrics, and I think it might be easier on the bottom end because we can only go to 0, and the top might end at say 80 versus 100. You can't control that, but you know the bottom is 0. Now, you can see here from the chart, will we get to 0? So here's the 20, just to put that in perspective, to bring you back up to speed with what we just looked at from the rational root. At the bottom of the 2014 cycle, where the price was $199, the CBBR confidence, based on all of these metrics put together and algorithmically produced this chart, this overlapping chart, the CBBR confidence was 2, pretty low. If you bought at 2, you were in one happy unit. In 2018, the bottom was at approximately December 14. The CBBI was 3, pretty low. We are currently at 5, but really we're at 4. And I think after the last couple of days, we might, we've got to maybe see a 3 handle. I'm looking for a 2 handle. But we're getting low. We're basically getting there, I guess is what I'm saying. So if you're DCAing around these prices, I don't think it's going to do anyone any damage. If you've got a bit of a long time horizon, I mean, it could be very beneficial for the next couple of years. The halving is only, the end of 2023 or start of 2024, whatever it's going to turn out to be now with the blocks happening so fast because of all the hash. Next couple of years, got to be damn exciting. By the time we hit 2025, I'm that pumped about just the potential, not even about what might happen, just the opportunity. It's very rare you get to sit in an asset or buy an asset that has an actual asymmetric upside. It's very rare. And nothing else has that, quite frankly. No house, no stock. It's impossible to stock pick those. It's just an exciting moment. And lots of people feel it. It feels dead out there. And as I've said, the FUD is strong, but, just hang in. All right, let's end with the daily chart here for BTC AUD. Friggin' AUD is doing my head in. Aussie's now back over 29K, the price, buy price. So, I put this box in here. I'll zoom out a little bit. You can see I put this box in here quite a while ago now. And I said this is likely the good buy zone. We've only really just entered into it. Will we get under 20K Aussie? Look, I don't know. I think it'll be a miracle if we do. So look, let's get back in here. It's just one of those, oopsie daisies, pardon me. You can see there's not a lot of strength. It's not going to just pop up. So it is a great time to DCA. If you have conviction, if you've done the work, if you've read the books, if you've listened to the pods, if you understand what you're doing a little bit about Bitcoin, it is a great time to DCA. If you've got a little bit of a long time horizon, could we have played the cycle better? Absolutely. We did not maximize the cycle. That's okay. It's very tough to do. It's so hard to do. Wow. So look, we'll take it. We'll take these cheap prices and feel really happy about that. But yeah, keep reading, keep listening to things, guys. Learn as much as you can. Just stay safe and protected and prepared out there at the minute. Financially, there are some more unusual things going to pop up in the very near future, I'm sure. But I'll leave you there today. Went as quick as I could. Just couldn't put everything in. It's just absurd. So stay well. Thanks for coming as always. And if you've stayed this far, I really appreciate it. Hit the like button. That'd be appreciated. And I'll see you next week. Cheers, guys. Bye.